overall health of the economy had its worst first quarter since the depths of the recession back in 2008. It fell by nearly 3%. Christine Romans is here to explain further. Why did this happen?
Terrible weather, Carol. Terrible weather. You had people in the first quarter. Remember how horrible that winter was? You had companies, businesses, the stock was sitting on the shelves. You had trucks that couldn't move merchandise around the country. You had open houses for homes that couldn't be had. You had job interviews that couldn't take place. And so you had 2.9% the economy shrank in the first quarter. That is really, really ugly.
It is, and while there are those wishing to stay away from the discussion, it must be placed on the table. That wonder about American energy dependence when once again we have massive instability in the Middle East. And then there's the recent numbers on the gross domestic product. Number down, the sky is falling. Please don't panic. Let us all make sense of it. Let's welcome in Chairman of the Society to Advance Financial Education, Steve Beaman, joins us today in Midpoint. Steve, thanks for being with us.
Well, it's my pleasure, as always, to be with you.
A pleasure to go ahead and now look at some numbers. And, okay, wait a minute. Let's just get it right out of the way. Should we all panic? Should we all be right now getting under the mattress here, throwing our money under it, and wondering when it's all going to crash?
Absolutely not. The first rule of successful investing is not to let your emotion get ahead of you, and a panic right now is not what you need, but calculated, rational thought.
All right, let's get to the numbers here on calculated, rational thought. 2.9%. Make some sense of this, if you would, for the general public, because let's face it, we're throwing numbers around here like crazy, and the guy or the gal sitting there right now worrying about their pension and their IRA and everything else is wondering, what does it really mean?
That's exactly right. If you look at the U.S. macroeconomic models that predict these things, they have so many variables in them, even the people who build them can't understand them. So to put it in English, we did come out of a very harsh winter, but also a time in which Social Security taxes boosted back up in January after a hiatus they had been on. That took a little bit of spending out of the consumer's pocket. We did see government deficits drop significantly, and that's a destimulative effect when it happens. So we had a number of things converging in the first quarter that caused the economy to look very bad on paper. Now, the reality is all of the economists predict a very strong second quarter, relatively speaking, so that will bring that back and negate the negative on it. But I think we need to be aware of it as people looking toward retirement and looking for how it affects us, because I think we feel this economy is not real strong and it's very fragile, but we should see a rebound here in the second quarter.
Why is it then that people don't think it's very strong when the numbers tell us, all right, there's been a dip here, but don't panic against it? You just hit one of the keys.
Well, we have a 24-hour news cycle, first of all, that fills people with a lot of fear. If you look at what's called the fear index right now, it's extremely high. Now, that's in the consumer side. If you look institutionally, though, there's a measure called the VIX, which is an ETF or exchange-traded fund that measures volatility, and the VIX is at a 2-year low. So clearly there's a disconnect between the average person and the institutional investor. And I think that's driven by fear, uncertainty, and doubt with all of the issues going on in the Middle East, the terrible things going on in Washington with the IRS scandal that everybody hears constantly about. So I think you have the general consumer saying, no, I don't like this. It doesn't feel very good. But businesses saying, well, we're shipping overseas. We're doing what we need to do. So there are cross currents that are creating this muddled economy.
I want to talk about that Middle East connection here in just a moment, but you mentioned convergences early, and we talked about the weather and so many other things here. In your professional opinion, of all of these convergences that happen, realizing, of course, let's throw out the weather here because we can't control what Mother Nature does, but out of all these things that kind of came to bear at one time, what was the most avoidable that we missed that could have turned the tide?
I think clearly there's a lot of fear in the small and mid-sized business community about the implementation of the Affordable Care Act. There's no question that that has affected their hiring practices. It's affected their capital investment positions. So coming into the beginning of 2014, that was a material effect on small and mid-sized businesses. You could argue it good or bad, it doesn't matter, but it creates instability and uncertainty for those people. So that started it. You follow on with what has been an increasingly volatile Middle East and a weather pattern that just was a vortex that happens once in a while.
But seeing as we still have Obamacare with us right now and knowing that that was one of the linchpins here, is there any reason to think it's going to get any better now for those employers? Because let's face it, they're in it right now. It's not going to change anytime soon, or at least we don't think it will. So won't this still just be a problem no matter how far we go into the future, as long as it's here and they still haven't figured out how to make the best of it?
Oh, I think what you said is the latter part is the most important, and that is business needs to figure out how to respond to this. When we're in a period of flux and they don't know which way the law is going, it makes it extremely difficult for business to plan. As it stabilizes, businesses will learn how to deal with it, whether they have more full-time workers or less, how they handle health care with this penalty that's now been delayed but will come into play. But the bottom line, businesses in America, especially large ones, are doing very well. They've got a lot of cash on the books. They have a lot of ability to exploit global opportunities. Investors in the, as you look at your 401k, I think people should be looking at global investment within their 401ks. We are one world now. And as Tom Friedman said in his book, the world's very flat, so we're all in this together.
All right, we're all in it together now, which means we have to pay attention to the planet, and that, of course, means what's happening on the other side of the world right now. What's happening in Iraq is having one big effect on people's wallets. It will certainly at the gas pump right now. But isn't there an issue of energy dependence here right now? Because we're right back to that argument that has been around for a while, and no matter how we look at it, if we are not more dependent ourselves, and we still have to wonder about what's happening on the other side of the world, this also will affect our GDP and also will affect every single dime that every American has or does not have in their pocket.
I think you're exactly right. You bring up a really important point. In the near term, and let's look at the next 5 years, we are reliant on Middle East oil, and therefore shocks that come out of this ISIS issue, if that affects the Straits, where you've got a quarter of the world's oil production coming out of Iraq, and if it affects that, we will see prices shoot up. We've already seen some of that with the futures markets driving prices to their $4 a gallon gas tank. You and I spoke about it last time. There's no real good future for that. Now, I would argue that going forward beyond 5 years, we do have an opportunity to start weaning off this dependence on fossil fuels and foreign oil. There are some major advances being made in solar technology that within 5 to 10 years could actually replace fossil fuels.
20 seconds. Can we say, though, that if there's one bright spot here, that the analysts will tell us that the economy has improved since March, so it's not as if it's all on a straight slide?
No, there's no question. The economy's not in the toilet right now. It has an opportunity here to grow. We need to get Washington to back out and put some policies in that are positive, and we need the globe to stabilize a little bit so we can all exploit the growth opportunities in the lower and the undeveloped world.
Steve, it always comes back to Washington one way or another, does it not?
Well, Washington is the epicenter of financial power now.
Every single time, no doubt about it. Steve Beaman, thanks so much for joining us, my friend. We'll do it again and again. As I always say, hopefully next time we have better news for everybody. Thank you for your time.
Thank you.
All right, Americans, so here comes the question to you now that we'll ask you on social media today. Are you comfortable? Do you think things are getting better? And if they're getting better, why? And if they're not, why? Give us some specifics here. We ask you about that on social media. Midpoint TV, hashtag Midpoint TV on Twitter, Facebook.com/Midpoint TV, or your email comments to connect@newsmaxtv.com. Midpoint, we question everything.